Hi everyone, thanks for joining us today. We're going to give just a couple moments for people to get moved in from the waiting room, but we really appreciate you taking the time to join us for Budget and Finance 101. So we have about 70 people here, a few more coming in, trickling in. We'll go ahead and get started. And those who join us after the hour are more than welcome. We know everyone has a lot going on. Again, welcome. Thank you for joining us today. My name is Molly Wheeler. I'm one of the deputy directors at the Utah League of Cities and Towns. Today's training is our Budget and Finance 101, which is a follow-up on the elected essentials training we have been doing for our newly elected officials, those who have been elected in the past, staff, anyone who feels like they could use a primer or a refresher on some key local government topics. Today, we are joined by Kerri Nakamura and Roger. Kerri is the owner of Nakamura and Associates, longtime friend of the league, local government budget guru, and Roger is our general counsel here at the U, pardon me, at ULCT, my old job shining through, at ULCT and longtime tax guru in the state. So we're excited to have them both here with us. A few things I want to run through before I hand the time over to them. First, we are digging more into budget and finance today. If you're in office right now, you will know that almost one of the first things that you will start doing as the calendar year shifts is you're going to start talking about your budget for the next fiscal year. And so we want to make sure that we're really giving you the tools and resources you need to do that well. With that said, we chatted amongst ourselves and made the decision today that looking at all the curriculum we're working through, we're not going to get through it all today. And we don't want to rush through it all. It's really important. And so what we're going to do is we will schedule a follow-up for this to this meeting to cover any other materials that we don't make it through today. We'll be sure to send that along to you so you can come in. As always, we'll record it, we'll post it later. So if you're unable to join that, don't worry. You'll still have access to slides, the video, anything like that. For today, and before I turn things over, you all, we're holding this again as a Zoom meeting to try to make it a little bit more interactive. Our asks for you are a few things. One, if you can turn on your videos so that we can see you and see who we're talking to rather than just our own faces on the screen. That's really great just to see your faces and make those connections. Second is that we have almost 100 people on this call. And so if you can make sure that you're staying muted throughout the call so that we don't have any background material, kids yelling, dogs barking, anything like that as we move through this. It's just really helpful to kind of have that basic level of kind of decorum and respect for all of our peers on the call. Another thing we ask as a league in almost all of our meetings that you do not use AI note takers. When you have an AI note taker, it creates a record. As we talked about in your first training, those government records are publicly accessible. While in this instance, we're not really going to be talking about any deep legislative strategy or any things that we do need to keep private or confidential, we would just appreciate getting in the habit of not having AI note takers. And again, I see Josh's comment, Mayor Bluff, or pardon me, Mayor Ewing from Bluff. If you can't have your camera on for any reason, that's totally fine. I know some people's technology doesn't have it, it isn't working, you're eating, anything like that. If it doesn't work for you, no pressure. But if it does work, we'd love to be able to see your face. For questions, we're going to be using the chat feature for questions. So if you have a question during Kerri's presentation, go ahead and pop it in there. We'll try to keep track of them and answer them as we see them. So if you have any questions, please ask. I guarantee there are no dumb questions here. It's a lot to take in, and I guarantee you that other people have that question as well. So it's well worth the time to make sure we're clearing up any confusion and answering those questions. As I mentioned, we're going to record this, we're going to post it on YouTube, and Kerri has also offered to share the slides with us later. So you don't have to panic about taking notes or taking pictures of slides or anything like that, unless, of course, that's something you would like to do, in which case you are welcome. So with that, Kerri, I think we've covered all of our basics, so I'll go ahead and turn it over to you.
Wonderful. Thanks, Molly. And thank you to everybody who has joined on this, what it up here on the Wasatch Front is becoming a snowy day. I hope some of the rest of you are getting some snow also. We need it this year. And thank you to the League of Cities and Towns for always including me, letting me play in the sandbox, I tell them. I love local government in Utah. It's where I spent the bulk of my 30 plus public year career. And it's really fun to continue to participate with local officials. And I always tell everybody that, one of the things I do is I help local officials get their policy agenda through and get their policy agenda done. And that's why I love budgeting, because budgeting is the way we do that. And so I'm going to jump right in. And as Molly said, feel free to put questions in the chat. I want to answer the questions, and I have Roger here to help to answer the questions that you have. Some of this material might be repetitive for a few of you. Hopefully there's some new information. And then the second part that we'll schedule for a later day will go even deeper. So with that, let's get started. I really want to talk to you today about what we call align and shine, creating transparent budgets that reflect your policy goals. These are the topics we'll cover today. We're going to talk about what is a budget, what is budget policy, how do you establish your community budget policy? And then we're going to jump into some of the budgeting basics. And we'll start with our first deep dive, which is the municipal budget process. Next time, we'll do some deep dives on revenue specifically, on expenditure specifically, on monitoring the budget specifically. But this is what I think we can get through today. So first, what is a budget? A lot of people will pick up the budget and they'll see some rows of numbers and they'll think it's an accounting document. And in fact, in some governments, the accountants do a lot of the budget. But I would say the budget's a lot more than that. The budget is actually the revenue and expense plan to help you meet your goals. None of you ran for office because you don't care and because there isn't something you want to accomplish in your community. And understanding your budget and understanding how you can get those things that you want to get done embedded into the budget is really how you accomplish those policy goals. It's also the way people can tell what your values are as a community. I love this drawing. I think it's applicable anywhere, in any business, in any government, and in any personal life. You don't need to tell me what your values are. I can look at your budget and I can understand what you value as a community, or what you're trying to accomplish as a community. And I would say that's even true when you look at a personal budget. I had cut this slide out of a last training, and somebody said, "Hey, where's that slide you show that shows your own personal budget?" And I think, I want you to put in the chat, when you look at this, what do you know about me? What can you tell when you look at where I spend money? Molly, I don't know if you have the chat up, if you can read a couple of the ideas.
I have the chat up. We have some that say, we have two coming in, that a lot saying, and you love to travel. Yep. And that
Yep.
you're hopefully taking fun trips.
Yep.
Not traveling for, boring reasons. And that they need to know where your favorite place to travel is. You're a homeowner. You like to eat out a little bit.
Yep. Yep.
Charity is a big
those
category.
are all really great things. What do I think about bank fees? Whoa, I hate them. I try to hold them down as much as I can. I don't buy a lot of stuff. I tend to put my money into travel. If you look at my merchandise spending, it's really not all that high. So, right. I mean, those are the things you can tell about me by looking at where I spend my money. And the same is true for a community. And I'll tell you, I can't pick a favorite place to travel, but the most beautiful place I've ever been in the entire world is Palau. And if you haven't been there, try to make a point to go to Palau. It was a work trip, but I was there for 3 weeks. And so I got to do a lot of play while I was there, working with their government on budget and finance, believe it or not. But the most beautiful place I've ever been on earth, Palau. But when you look at community budgets, you can tell the same thing. You can tell what a community values when you start to look at where they spend their money. And I know we have a big mix of officials on the call today. I know we've got some large communities and some small communities. So when I go out and pull some of these things, I'll tell you when it's coming straight from a community or I've created it. These are out of a community's budget book. So a community, $58 million community over there on the left, you can kind of see they have a high priority on public safety. A lot of their budget is in public safety. Then you can kind of see where their other spending falls out. And then the other chart on the other side is another community, and you can see the way that they've shown their priorities. The next chart I created, and I call this one a tale of five towns. So you can see that the largest budget on this chart is, they're all under $1 million. Every one of them are under $1 million. But again, you can start to see when you look at the expenditure pattern what some of the policy decisions are and what some of the things are that are driving the communities. We've got some communities that are putting quite a bit into their parks and recreation, given that they have relatively small budgets. You see that highway funding. And you're going to see when you start to look at the revenue picture that for a lot of our really small communities, those Class C dollars that they get are a big chunk of their budget. And that's why you see their expenditures coming through this way, because that's a lot of the money that they get. So again, I'm going to just remind you, you don't need to tell me what your community values. I can look at your budget and I can start to get a sense of what your community values. And then when I go and I visit your town or your city, it's interesting how I can see that difference. When I see a community that's put a lot of their resources, for example, into their parks and trails and recreation, when you get there, you get that sense in the community. Helper is a really good example of a community that has put a lot of money into assets that when you get in that community, you can really feel it. You feel where their budget priority has been. So as we talk about this, and I know a lot of you were in Meg Ryan's training on land use planning, and planning matters, but I would say budget planning matters too. And if you're not being intentional and deliberate about the budget, and if you're not doing the budget as kind of part of an ongoing process, not just a May and June process, you might miss a line and not have your budget aligned with where you want to head as a community, and the things that you want to accomplish. So here are kind of the ways that we start to talk about how the governing body establishes the values. The governing body, that's the council. And if you're in a form of government where sometimes the mayor sits as a council member, they kind of have a dual role here. But the governing body provides the legislative direction for the budget. And it's either to a manager or the mayor or just to themselves if you're in one of those where some of you are administratively over different parts of your budget. But it's as a body that you provide that direction. Some of the tools you may use to provide the direction. You might have a strategic plan. You might have a policy statement. So I've worked with some communities where we adopt legislative intent statements as part of the budget process to say, this is what we're intending to do. You might have a goal statement, but whatever you do, it should be intentional. You should make sure that the community's needs are considered, that it's not, we're just updating the numbers from what we had last year and redoing it this year, but really, really step back, take an opportunity to step back each year and saying, is our budget aligned with what the community needs are? And then if you have those goals in your plan, are they measurable and are you measuring them? And are you reporting them out to your community? And are they achievable? So I talked to you about that you can't really have a policy-driven budget if you're only doing your budget in May and June. And on this chart, what I'm showing you is if you're just doing May and June, you're kind of doing those two blue boxes. That's when you have your tentative budget, you align the resources to your goals, and then you adopt your formal budget. But really, you should be doing this all year long, and it should be part. And I would say that it starts, let's jump to the I'm going to jump here and then go back. It kind of starts in January or February, where you establish your policy budget. You might create a 5-year plan. One of the reasons we like January and February is because those of you who are new to office, this gives you your opportunity in that first budget cycle to kind of say, what are we trying to achieve? where have we been in the past? Where are we headed? And what are we trying to achieve? And I think an annual goal setting session or a strategy session to talk about the year that's coming upon you. When you come into office, you're halfway through a budget year. So you've got a pretty good look at where they were headed when they set that budget and where they're going. And then you move over and probably your budget officer, will talk about this more, reviews your historic revenue and expenditure projections, presents the tentative budget by the first Tuesday in May, and then adopts it in June. And then you go down and through the rest of the year, the legislative body and administrators are monitoring and controlling the budget. And they're making sure that the policy goals are being accomplished. And there are a lot of different ways that you can do that. And we'll talk about some of them as we go on. So when you talk about budget policy, please know there isn't a right or wrong answer. I mean, policy is, there might be best practice, there might be guidance, but you're the one who's on the ground in your community. You're the one who understands the needs of your community. And your staff, if
Oh, Kerri, did we lose you?
and I
Oh,
have
there
to,
we go.
yep. Do we have a
Oh,
question?
sorry. You cut out just for a moment.
Oh, I'm sorry.
No worries.
Is it okay now?
It's okay now. So,
Okay,
yep,
perfect.
we're golden.
Okay, so what I was saying is I'm a staffer. I will never put my name on a ballot. I am not as brave as the rest of you to go out and put my name on a ballot. And my job as staff should always be to help you accomplish your goal, not to get my goals accomplished. That no one elected me to get my goals accomplished. I need to help you get yours accomplished. So here are some sample policy objectives that I've seen in other communities. One might be that you have an objective to have a structurally balanced budget. And this is really interesting that for large communities and small communities, you can get out of structural balance if you're not intentional on this one. So you will have in your budget, you'll have ongoing funding sources and you'll have one-time funding sources. And the trick is to make sure that you're not paying for your one-time expenses or for your ongoing expenses with one-time revenue. So you want to make sure as you go through your budget and you're looking at it, and some communities have had a budget policy about that, to say we want to make sure that we are structurally balanced, that ongoing money pays for ongoing expenses. And when we are fortunate to have one-time money, it only pays for one-time expenses, that we don't get in the habit of patching ongoing expenses with one-time money. Other communities set goals around services. Like, for example, some communities may have a goal around the acreage of green space that they fund in their community. And there are some national standards that you can get regarding percentage of population served. And I know for our smaller communities, you'll say, we don't even have 1,000 people in our community, but you can do the ratio so that you can make it work for your community. Other communities might have a policy objective about the maintenance of streets. They're, when you look, they're categorized at different levels in terms of the condition that they're in. And you may say, we can't afford to have all of our streets at level A, but we're going to have all of our streets at level B. That's what we're going for. And if you have that kind of policy, then when we see your budget and we see the spending, we see that you're driving toward that. That if you have streets that are falling to C and D, you're probably going to put those above some other priorities in the budget if you have a real goal of trying to get your streets, your neighborhood streets, to a level B. I've seen a lot of different policy objectives around compensation, particularly for law enforcement, where communities will say, we want to be compensated at X% of the region so that we can, number one, stay staffed, and number two, attract and maintain our staff for law enforcement. I've seen other communities that have a fund balance policy, and we're going to talk about fund balances in a minute and how much you can have in fund balance. Well, I'll let you know right now. A town can have up to 100% of current year revenue or prior year revenue in the fund balance. Cities, you're limited to 35%. So a city could never have a fund balance policy that their fund balance wouldn't drop below 75%, but they might have one that says it won't drop below 25% because the state maximum on theirs is 35%. A town where you can hold up to 100%, you might say, we want to be fiscally healthy. We want to feel secure. So we don't want our fund balance to drop in our general fund below 75%. And then the next one gets a lot of talk. Property tax increases. As a community, do you favor large, less frequent increases so that when you go out for an increase, it might be a 20% or a 30% because it's been a number of years since you've had one? Or do you favor smaller, more frequent increases? You get to decide that. You are 100% in charge of how often and to what extent you increase your property tax. I will say as a best practice, I don't think that never increasing property tax is a long-term sustainable policy direction. I know some communities have tried it. I've got some communities that I work with that say we haven't increased it for 30 years. You can see that in their priorities. You can see it in their spending. But that's a decision that's been historically made over time, but it has ramifications. So that's just Kerri budget policy. Again, not right or wrong, but that's where I come from on budget policy. Raj, I'm not sure you disagree with the never increase approach.
No,
Not the best policy.
and I would add this one caveat on property tax. Property tax, we'll talk about this next time on truth of taxation. Structurally, it takes out any inflation growth. In other words, your property tax, you cannot get any inflation growth on property tax without going through truth of taxation, which under Utah law is considered a tax increase. You do have inflation built into most of your other revenue sources. So it has its own variable that makes it very different.
Right. Thanks for that, Raj. And yes, in the next session, we will go into that in excruciating detail. Why you do not get any inflationary adjustment on your property tax. So next, with the budget, I think every good budget includes a budget message. If you're a city, you are by state law required to have a budget message. Towns, you're not all required to, but I think it's a really good best practice. The budget message is a narrative that goes on top of all of those numbers. And it kind of states what goals you're trying to achieve. It lets the public know. It takes those numbers and puts them into a narrative form. You may, in your budget message, reveal major assumptions, both revenue and expenditure, that you made in the budget to help explain to the public what you're trying to accomplish. You might identify different factors that led you to make different decisions in the budget. You might identify unique opportunities. We're going to talk about that a little bit more when we talk about projecting revenue. And you might focus some attention on the changes from the prior year budget. And we'll talk more about why that shouldn't be your only focus, is just the changes from prior year as you go into the next year's budget. But that's what a good budget would include, is a narrative message. But before you do all of that, before you have all of that, the budget policy and you get it all aligned doing that, first you need to understand the basics. And so I want to spend the next little bit of time kind of talking you through the basics and the process. So we're going to talk about some definitions, some deadlines, and some requirements. I always like to start this section with giving you a list of resources that you can use like long after this webinar is over. The Local Government Resource Center at the State Auditor's Office is rich with information. It's got a lot of different things that you can go look at, different forms, different reports that can be very instructive to you. And one of my favorites is the Uniform Accounting Manual for all local governments. And you'll see that this one was revised in May of 2025, which is great because it includes all of the latest law changes. And the reason I really like this manual is because as you read through the manual and you read through the different elements that are required in state statute, it links you out to, if you're a town, it links you to the town language. If you're a city, it links you to the city. For those of you who wear a dual hat and might sit on a district board, it even has the district statutes linked in there. So this, I think, is I think it's an underrated, but really great resource. And whenever I do my training, I go back into this uniform manual and line it up and make sure that we're in the same place as what the state law says. So some of the things you're going to learn when you look through that manual is that budgets must be balanced in the state of Utah for local governments. There is no deficit spending allowed. We have to balance, and we have to balance each fund. So when you look at your budget, when you go in, if you're a first-time official, you're going to have a general fund budget, but you're also possibly going to have other funds. And when you adopt your budget, you don't just adopt the general fund, you adopt all of these other funds. So you have this comprehensive, large budget that you've adopted, one part of which is your general fund. But I will tell you, your general fund is most likely where you will spend most of your time, where you'll spend most of the conversation with the community. And we'll get into why that is in just a minute. But another rule of the funds, how the way we do fund budgeting and fund accounting in local government, is that all funds that aren't spent within an appropriated budget lapse to the fund balance of the appropriate fund at the end of the year, with the exception of one fund, the Capital Projects Fund. And we're going to talk about the Capital Projects Fund. Anyone who sat through my training knows it's my favorite fund because it really is how you can get some of your stuff done as a community. But everything else, all funds that aren't expended, lapse to the fund balance of the respective fund. They don't all lapse together. It stays within a fund. We do fund budgeting here. We budget by fund. I talked to you a little bit about those general fund maximums as a percent of your budgeted revenue for the year. Towns, you're 100%, cities, you're 35%, and if you're in a district, it's 100%. I throw the district in here because I think a lot of you in your city position sit on district boards. And so I want you to just have that understanding. So when we do fund budgeting and fund accounting in local government, remember, we are not in business for profitability. So those of you who are coming from the private sector and you're used to profitability driving the decisions, profitability doesn't necessarily drive our decisions, especially in fund types that we call our governmental funds. And so what we put in there, did I freeze again, Molly?
Nope, you didn't, but we did have our first question come in.
Great.
So we're going to do this question, and then I'm going to ask, if you don't mind, if you read, I forgot to mention this at the top, but if you could rename yourselves, if you're in here with your email address, we can have your name, your role with your community and the municipality you represent. That would be really helpful. So this email address asks, what happens if you have more than 35% of your budget unused as a city? Where does that money go?
So if you have more than 35% of your, and this is a snapshot in time, let's go back so that we know what we're talking about. We're talking about the general fund balance maximum. This is a picture in time, and it's June 30th. It's the last day of your fiscal year. It's when your books close, and it's only on your general fund. This is not the rule on your enterprise funds, but on your general fund, if you're a town and you have on that day more than 35% of your budgeted revenue that's fallen to your fund balance now because it didn't get spent, you will get a notice from the state auditor's office. If you do not correct the situation, and I'm going to tell you, Capital Projects Fund is your friend in how you help correct the situation. But if you do not correct it successively, the state can withhold revenue to you. They can withhold different revenues that are flowing through the state to you because you are in excess of the revenue that you are supposed to have as a community. Okay. Raj, is there anything you want to add on that? Nope. Okay. Okay. So when we talk about our different funds, I was telling you that profit's not what we drive for, especially in our general fund. It's not profit. Any of our governmental funds, profit's not what we're looking for. Some of our proprietary funds we treat a little bit more like a business, and people who come from a business background like the proprietary funds because they can understand them better. They understand what's driving them, that you might be wanting to have some retained earnings, we might call it, in a proprietary fund instead of fund balance as we do in our governmental funds. But I loved this graphic. I pulled it from one of our community's budget books to kind of show, when you look at this community, their general fund is only 24% of their big total budget. Remember when I told you all those different funds that add up? They have an airport. So 29% of their total budget is their airport. They run public utilities that they run as enterprise funds. 28% of their total budget are their public utility funds. But I'm going to tell you, even in this community, most of the conversation is around that general fund and around that 24% of the total budget that they're doing. So over here, when you see the side where I've told you, you've got your general fund, which we're going to talk a lot about, capital projects fund, we'll talk about the debt service funds and special revenue funds. Those are all considered governmental type funds. And then there are internal service funds and enterprise funds. Those are proprietary funds, and they run a little bit different than for one thing, in your governmental funds, especially in your general fund, you won't fund your capital projects largely out of your general fund. You'll use a capital projects fund to help you fund those. And we'll talk about why you want to do that. Within your enterprise funds, your capital budget is part of the fund. So your capital outlay and your capital expenditures are part of that proprietary fund. Okay, I know that sounds confusing, but stay with us. I think that we'll keep uncovering it for you. So you have to have an understanding of fund accounting and fund budgeting to understand how we do budgeting at the local government level. And again, I'm going to go back and say one key is that each fund is its own self-balancing set of numbers. So don't lose sight of that.
Kerri,
Molly.
before we dig into this, we have two questions. Can we tackle them really quickly?
Yep.
So one, I think, still is going back to this 35% and 100%. So Lauren Colby with Kearns is asking, so are you essentially saying that we can't have any rainy day funds that extend beyond 35% or 100%?
Correct. That is your rainy day fund limit by state statute.
Excellent. Thank you. And then
and let's talk about the policy why the state legislature might say you can't have more than, if you're a city, you can't have more than 35%. And if you're a town, you can't have more than 100%. That differential between 35 and 100 is recognizing budget size. They're recognizing that just by the nature of the size of a budget of a town, they may need to have more than 35%. So they're giving them that up to 100%. But the bottom line is the state legislature's policy direction is they don't want you collecting more revenue than you need to provide services. They don't want you taking the public's money and holding on to it. They want you to balance your budget, know what your needs are, align everything we've just talked about, and then set a little bit aside in case there are unexpected things that you didn't know about, but they're going to put a limit on that little bit that you can set aside. So
excellent.
That's the policy reason why they would put that there. Molly, next question.
Yep. So then we have Jared with the Clarkston Town Council. Is there a number that the mayor or town council is allowed to spend before requiring town council approval?
No, there is not. Everything that is spent must be appropriated. Mm-hmm. So the budget, once you have your appropriations out there, that is your guide. Now, that gets to an interesting question about what if I want to move money from one appropriation level to another appropriation level. So within an appropriation level and at your funds, often the fund is the appropriation level. So for your water fund, your sewer fund, the appropriation level is your fund. For the general fund, however, you have different expenditure appropriation levels, and that's driven by the way you lay your budget out. So for example, if you have a police department and a fire department, and those are both, have expenditures against each one of them as a level in your budget, then that is your level of appropriation, police, fire. If you're a community that instead has public safety as the appropriation, then that's your level. The key for that is if you've got police and fire, you can't move money between police and fire administratively. You can only move money between police and fire with council action. And then similarly, moving money from fund to fund, that always takes legislative action. That can never be done just as a journal entry or a book transfer or an administrative change. And the reason for that is because those kind of moves are policy shifts, and your council is your policy setting body. So if we're going to move money from a water fund to the general fund, that's a policy shift. We're going to do less in water and we're going to do more in the general fund, and the legislative body needs to weigh in on that. If you're going to move money from fire to police, that's considered a policy shift. The legislative body needs to weigh in on that. Does that fully answer that question?
I think so. And I think we have another question from Council Member Smith of Riverton that is getting to a bit of this, which is, I think, considering maybe some more like discretionary spending of like the mayor's budget or the council's budget for their possible priorities. So can you put it into your budget that the mayor can use X dollars without the council's approval?
Sure.
How does that work? And maybe could you talk a bit too about like who gets to spend money in a city? Like, do Molly as mayor get to say, I'm going to swipe the city card and spend this money, or what are the protocols in place?
Okay, so first off, the expenditure plan is laid out in the budget. That's appropriation. Your appropriation may say, like within the mayor's office budget, you may have a line item that says, let's see, what have I seen it called? Mayor's priorities. You may have a line item in there that says that. If the council puts money in a line item that says mayor's priorities, council, you are done talking about how that money gets spent. You have given the mayor the money, you've appropriated it, and then the mayor gets to spend the money. If you don't want the mayor to spend money on mayor's priorities, don't appropriate it. Normally what we see in a budget is laid out in categories: personnel services, charges for services. You might have small capital purchases. That's not your capital projects. Some I see on some budgets still a miscellaneous line. And once you've put money in that miscellaneous line, it's kind of miscellaneous of what it gets to be spent on. So really the legislative control is at that appropriation level and what you put into the budget. I hope that, and I've seen councils that have the same. I mean, some councils where you've got a big council, each council member may have, a $5,000 kind of discretionary line. I can tell you in the Salt Lake County Council, each council member has it. I think it's only like 3,000, but they can do with that. They can go to conference if they want to use it for that. They can do different things with the money. But at the end of the year, if they haven't spent it, their rules allow them to go through a public hearing process and donate it to a group in the community. Now, I'm telling you, that's when I was there years ago, maybe different now, but that was how they were handling that kind of a program then. Some council members wanted to go to a conference. Other council members didn't choose to do that, couldn't do that. So that's how they kind of gave that sort of spending authority. But once it's appropriated, I know a lot of councils look at the check register, and I think that's great because I think it's good transparency. But really, if the spending is in line with an appropriation, that at that point is an administrative function. Does that answer the questions? Okay, let's move on. So let's talk about the general fund. The general fund is the fund where most of your resources to do kind of the, the bread and butter, the meat and potato services of local governments all happen in your general fund. So I've listed over on the side some of your revenue sources that you're going to see in your general fund. The biggie is sales tax. Most of you, that is going to be the biggest source of revenue in your general fund. There might be one or two of you that it's not, but for most of you, that's going to be your biggie. A lot of you, the next is, I've got it listed here as road funds. A lot of you might bring it in and call it intergovernmental transfers, that it's the transfer that comes from the state of Utah, but it's your Class C road funds. Especially in our small communities, that's a really big piece of their revenue pie. Property tax, some of you have different amounts and some of you are differently dependent upon your property tax, but for most of you, it's a significant portion, but not the largest portion of your budget.
Kerri, it is also the only tax that the city can make a decision to raise taxes, has some discretion about what it wants to do with that tax.
Right.
All the other are set by the state. In fact, they control basically what happens with those taxes.
Right. All of the rates, everything's set by the state. But that being said, like utility sales tax, that's one you get to choose whether you turn it on or not. But once you decide to turn it on, the rate is set by someone else. You don't get to do anything with that anymore. You might have a little bit of interest income, probably a little more anemic right now, given that interest rates are down. You might have some charges for services revenue. Maybe you charge to rent your park pavilion, or maybe you charge for different things. Maybe you charge to rent City Hall for special events. So you might have some charges for services revenue come in. You might have some fines. It just depends on your setup as your community, what those general fund revenue sources might be. It's really interesting. In another training that I did, I went through and I listed and we'll do this in the next time we get together, but listed all of the different revenue sources available. And it was very interesting then to match that up to different communities. And I don't know, do we have Helper on the line? Is anyone from Helper here? I would say, the mayor and Helper, they have been so good at exploring every single revenue source available to their local government and deciding which ones to use and not use. And I think almost everything they're eligible for, they use to try to build their community. Capital Projects Fund. This is the one that I told you is my favorite. And it's also the one that I told you gets you out of being over that 35% problem if you're a town and 100% fund balance problem if you're a city. So the Capital Projects Fund is where in your general fund you save money up for your long-term capital projects. So if you want a new building or a fire station or a swimming pool, I have water line on there and it shouldn't be because that would be probably in your water fund if you have a water enterprise fund. But any of these big capital projects, if you had them in your general fund, if you just said, okay, new swimming pool, community swimming pool, and you listed that as an appropriation in your general fund, what would happen is every year as your budget closes, because let's say that you guys have a plan and you need to save up for 5 years to get the money to build a community swimming pool. Every year in your general fund, the money that you appropriated to that would lapse to the general fund's fund balance. So then the next year when you set your budget, you would have to rebudget that money up and put any additional money you want to go with it into that appropriation level. And then you would have to keep doing that over and over again until you got to the amount that you wanted. The Capital Projects Fund solves that problem for you. So if you put community swimming pool in your Capital Projects Fund as a project that you want to start saving toward, and let's say you put $50,000 in there in the first year. When the budget year closes and the funds of all the others lapse to their retained earnings or fund balance, with the Capital Projects Fund, it stays with the project. So your $50,000 that you budgeted into your community swimming pool stays in that project line. And then the next year you can go add more money to it. So until you've got the money saved up that you want to do your capital project. If you think you're going to be over your 35% or your 100% limit on your fund balance in your general fund, look to your capital projects fund and see if there are projects that still need more money in them. And if there are, make the transfer. And then that gets you down below what you need to do. I don't think that that is deceptive. I don't think it's trickery. It's you saying in this year, we had additional revenue and we have an unmet need sitting over here in our capital projects fund, and we're going to put the revenue over there to meet the unmet need. And so I'm completely fine with that from a policy perspective, from a legal perspective. I think it's actually shows that you're being very thoughtful and intentional about what you're trying to do with your budget as you're trying to meet all of these needs. The downside, and I learned this very early in my career when I was I call it a young budgeteer. I was working for a community that had a capital projects fund, and they had all of these different projects listed that had budget in them. And when we started asking questions, some of the projects were long finished. They had been gone for a long time. But remember, the money doesn't move out of the project. It doesn't fall to a fund balance. So in that year, the budgeteers, we were able to go to the legislative body and say, hey, just by closing finished capital projects, we found you, a couple $1 million that you can reappropriate now. You can put somewhere else. That particular entity now has a policy where they sweep their capital projects fund every year because the administration doesn't want to leave that happening anymore. But with your communities, you need to keep an eye on that and make sure you're not keeping these projects open. But I love the capital projects fund. It's a really great budgeting tool, especially for those of you who some of your policy objectives are capital investments in your community, that there are some things you want to do.
Kerri, we have a question for our capital projects fund. So this is from Councilmember Wilson from Saratoga Springs. Can cities or towns invest the money in their capital projects funds, or does it need to remain in risk-free accounts?
That's a really great question. And you need to keep it pretty secure. PTIF is where most local governments invest their money. You can have a revenue policy, but I would sit down and have a revenue policy of where you will have, your different money funded. But one of the reasons you want to be very, very secure on these is if the market turns on you and, that's not going to be good. You do not want to have your stuff in, high risk, 20% return, things like that. This is the public's money. This is not your money. And you need to be super judicious and super careful in the instruments that you choose to use to invest the money. And so I would highly caution you against getting too creative with the investment portfolio of your public dollars. Raj, it looks like you came off.
I just wanted to say that when you have your audits, they're going to look at that. I mean, there are limitations that state law imposes on what you can do with investments. So aside from being good management, you'll get an audit write-up if you take too many flyers on those.
Yeah. I know a lot of times, people look at it and they say, wow, I could invest that portfolio and do a lot better than what it's getting right now. But I would highly, highly caution against that. PTIF is a really great place. It's the Public Treasurer's Investment Fund, and they go out and try to maximize the investments for you. Okay, Debt Service Fund. This is a fund that's been created so that you can accumulate the resources necessary to pay principal and interest payments on any debt you've issued, be it a bond, be it a loan, something like that. So if there's a legal mandate or debt covenants that exist, you may need to have the debt service fund set up to show how you're doing that. Okay. Proprietary fund. Now we've talked about these a little bit. These look a little bit more like a business. Those of you who run businesses tend to like these more. Two different kinds of proprietary funds. One are internal service funds, and then others are enterprise funds. Internal service funds are used by kind of our medium and larger sized communities. I haven't seen them used a lot in our smaller communities. Basically, what it is when an organization takes a service that could look a lot like a private sector service and sells the services back to the government. So, for example, fleet management. If you have an organization that has a large fleet, they may run their fleet program as an internal service fund, meaning that then what you'll see in every one of the department budgets, like in the general fund and maybe even in their enterprise funds, is that they buy their services, they buy the fleet services from the fleet fund, and then they run that fund more like a business. I've seen it with technology. Some of our communities will run technology as an internal service fund. And some of the reasons that they do that is by running it more business minded, it actually makes the service a little bit more efficient and more effective. A downside is that, you know, your community or your agencies can't go out and buy the service from the private sector. They have to buy it from that fund. And so they sort of become takers of whatever the fund says that the expense will be. But you'll see that in some of our larger communities. All size communities, I see enterprise funds. Our very smallest communities will have enterprise funds, and our largest will. Enterprise funds are where we take a service that is user fee driven. It is not tax driven. So the people who pay for the service use the service. I'm going to ask a question, and Molly, I'm going to ask you if you'll watch the chat. Okay. Tell me some services that might be an enterprise fund service in your local government.
Refuse collection, stormwater, water, trash, sewer, garbage, water, sewer,
Got it.
water, sewer power.
Got it. Now I want people to do a thumbs up or a thumbs down. Thumbs up if you believe that the water users and the taxpayers are always the same people or generally the same people. Thumbs down if you say nope, they're different people. What are we seeing?
Seeing some thumbs up coming in. A couple thumbs down.
Okay.
I'm looking at the people's pictures. We've got a combo of emojis and people doing it in the
Great.
chat. Thumbs down in the
Okay.
chat. Emojis say thumbs up.
So I'm going to tell you, in most cases, your taxpayers and your water rate payers, I would almost say in every case, your taxpayers and your water rate payers are not the same people. There's a lot of crossover, but they're not the same people. Can throw in the chat some examples of people who might pay a water bill that don't pay property tax or sales tax.
Higher education,
Got it?
renters, hospitals, churches,
Yep.
people living in the county but not the town, different religious institutions,
Yep.
county courthouse.
Yep, there you go. So state, if you have a state facility in your community, they don't pay sales tax, they don't pay property tax. They pay a water bill. If you have schools, they don't pay property tax, they don't pay sales tax, they pay a water bill. So that's, you know, the reason historically why people created these enterprise funds was because we want the people who use the service to fund the service. We have some communities that, in addition to their refuse, which you mentioned, and the sewer and the water, some run golf that way. They say, we don't want golf in our general fund. We want the golfers who use that service to pay for that service. And by creating it as a fund, what have they made it now? A self-balancing set of numbers, right? And if you decide as a community that you want to take general fund money and you want to appropriate it into your golf fund, that requires a conscious decision of the council to say, we're going to take some money and we're going to support the users of the golf fund with some general fund tax dollars. and put that money into the fund. I don't see a lot of communities do that. Some still do. Most have tried to turn golf, who have golf as an enterprise fund, have tried to turn it as self-sufficient. For a lot of years, golf was not self-sufficient until the pandemic. And then, I mean, it was like the golden era for golf. All of a sudden, our golf programs became self-sufficient because we had more golfers than we could get out on the course because it was a distanced activity that people could be out participating in. So that's a little bit about your internal service funds and your enterprise funds. Again, they self-balance. In both of them, you will run your capital and operating budget right within that fund. You won't have a separate capital projects fund for water. You won't have a separate one for sewer. You'll run it as part of it. It'll be a capital and operating budget. Raj, did you have a comment?
I was just going to say, there are about 30 some odd cities that own their own electric entities.
Oh, thank you.
And they're great. That's not, I represented them for a long time. There are special rules, special laws about transferring money from the enterprise funds that run the electric operation to your general fund. Now, you can do it, but understand there are special rules about doing that. The basic premise is you ought to be setting utility rates sufficient to cover the cost. If you're making excess money, lower them. But there's also, you have to take a long-term look. But I just want to make sure anybody understands that power has sort of its own world and it has its own rules about how you use that money.
But to your point, Raj, even, I mean, you are able to transfer money from your
Yes.
water fund into your general fund, but you do have rules. You have to notify ratepayers. You have to have a hearing about it. And if it's as part of your budget process, it needs to be called out specifically that you're making that transfer.
And we had some cities get in trouble over the years that sort of treated that as a slush fund over here that you could move money, and those days are over.
Well, it was treated as move money from the enterprise fund so you don't have to raise property tax.
Right.
That let's just call it what it was, right? That's what it was. That being said, Molly, I think you were in the session. We had a question this year. I have never had it before, saying, can we move general fund money to the water fund? And we said, you can, but why? Like, raise your water rate, you know? If you don't have enough, if the users of the water fund aren't sufficiently paying to support the water fund, raise your water rate. Don't have your taxpayers subsidize people who don't have to pay taxes by transferring their tax dollars over into your water fund. And those are the policy discussions, right?
Yeah. So, Kerri, we have a question from our Duchesne City Treasurer, Stephanie, about what is the interest rate and fees on an enterprise fund?
I need to hear more about that. I'm not understanding interest rate and fees. You set the fee, you set the user fee. But what interest rate are you talking about?
So Stephanie, I guess, are you asking, like, if you have your enterprise fund and that's invested in the PTIF, if you have to pay fees on that and interest rates on that? Mayor Fotheringham makes a note that funds are not cash, right?
Yeah.
So,
right. Don't
so
confuse funds with checking accounts.
Yeah. So Stephanie, maybe if you can clarify that a little bit more, or we can connect offline and make sure we get your question answered.
And hi, Mayor Fotheringham. Thank you. Good to see you. My former city holiday. Okay, we've talked about proprietary funds, the enterprise funds. We're not going to spend more time here. But again, this is just your reminder. Each fund needs to be balanced. Okay, if you take nothing else away, take away that each fund is a self-balancing set of numbers. So now let's jump into just some budgeting basics. This is just so that you know, overall for fiscal year for municipalities is July 1 to June 30th. Those of you who sit on district boards, it's probably a calendar year. The counties that you are trying to partner with, they are a calendar year. So they are January 1 to December 31. You are July 1 to June 30. You need to have public hearings to adopt and amend your budgets. You should have monthly budget reports for management. You should have quarterly budget reports that go to your legislative body. And once your budget's adopted in June, you have 30 days to file your budget with the state auditor. And then there's an entire finance package based on the size of community that needs to be filed within 180 days. So I'm going to ask if there are any more questions on that before we jump into the budget process, and I show we have 30 minutes left.
Yep, so we have one more that I see. So can you transfer, oh, hold on. Okay, maybe we got a couple. So let me make sure I'm getting all of these. So first, can you transfer money out of your enterprise fund to your general fund?
Yes, with a public hearing and notification of the people who traditionally pay. And that's really like in water. You need to notify the ratepayers, or sewer. You need to notify the ratepayers. It would be really hard, I guess, to notify the golfers that you're going to transfer money. And I haven't seen that happen, that we transfer money out of a golf fund to a general fund. I haven't seen them be that profitable. But there are some hoops you need to run through. They're not high. The hoops aren't high. And in fact, Raj, I would say over time, it's been made easier, not harder, to transfer money from your enterprise funds to your general fund.
Oh, yeah, I think the rules are clear. You can do it. It's not, but it's easier to do.
Yeah.
Perfect. And then Councilmember Carlson from Salt Lake says, can you talk about what a city might do if they have a different fiscal year than the county?
Oh,
And
well,
there's a whole every city has a different fiscal year than the county.
There is a whole
so what
can
are
of worms,
best practices
Councilmember,
with that, challenges, opportunities?
Yeah. It's really tricky. And I'm going to give you some examples. Mayor or council member in your community. Wow, did I elevate you fast, Erica? In your community. Yeah, the biggest place where you're going to see it or often is Sugar House Park. So Sugar House Park is managed by an authority, but that authority is supported by Salt Lake City and Salt Lake County on 2 different budget years. I have sat on both sides of those budget conversations. And it's tricky because if something has to happen at Sugar House Park, it's, well, did the city put it in? That's what the county will ask. And the county will say, well, did the city put it in? And so it's always like chicken egg. Who's going to put it in? You know, how are we going to demonstrate that both entities came together and did that? It's tricky, but it can be done, and it's done all the time. We have communities that buy their local law enforcement services from their counties across the state. We've got that situation, not just here in Salt Lake County. And all of that, it gets figured out, but it's tricky because you know, compensation adjustments, if you're doing it, you know, do you have to account for it? Because when is it happening? Have they already happened for the entity that you're working with? But it's tricky but doable.
But it's important to note, all counties are on a calendar year basis. Everything else in the state, except for a handful of special districts, are on a fiscal year basis. So that's just how it is.
Okay. Any follow-up?
And then our next question, I answered it in the chat, but just to flag for people. So there's a lot of acronyms throwing around. The one we keep using today is PTIF, the Public Treasurer's Investment Fund. I put a link in the chat that takes you to that page, and it explains a lot about what the PTIF is. Many of your cities, if not all of them, are heavily invested in the PTIF. So follow up with your city manager, your finance director, treasurer, anything like that to get a better understanding of how your municipal dollars are going into and interacting with the PTIF.
Great. Okay, Molly, I'm going to go on then. We are going to deep dive the municipal budget process. So this is the municipal budget process if there's no property tax increase. And as you look at this, the 2 that I just highlighted in gold are kind of what we would call the administrative or, you know, the executive side of the budget process. Preparing the tentative budget, your budget officer is usually going to be your mayor or a designee or someone kind of more in the administrative part of your government. Council member Carlson, for you, it's real clear. You're in a mayor council form of government. It's really clear that your mayor puts together the tentative budget. Then the next parts are all really legislative, making the tentative budget available to the public at the first meeting in May. The council will adopt the tentative budget, and that kind of kicks off the whole budget process. You'll provide notice of and have a public hearing, maybe a series of public hearings, but you have to have at least one before you adopt the budget. and then you'll make your final adjustments and you'll adopt your final budget before June 30th. And then it goes back over kind of to the administrative side where the budget gets filed with the state auditor within 30 days of adoption. I want to give you a sneak peek of what the process, how it differs if you're doing truth in taxation, but we are not going to go into any kind of detail on this today. We'll do it in our next session. But here's your process that we just talked about, that I just had laid out for you on the other screen. If you're doing truth in taxation, you get to add some pieces to it, and the process becomes longer. You can see that you're actually not done until that truth in taxation hearing in August, and your date by which you have to adopt your final budget is September 1st. When we talk about this, you're going to have a whole bunch of questions of how do I operate July and August if my final budget's not done. Let's save those for there. We could spend the next 2 hours talking about this, but I think if we do it in a sequential way where we can lay it out for you, it will make more sense. But I just wanted you to know what we're going to talk about now for the next few minutes is that you're not doing truth in taxation. It's the traditional budget process where you are not asking to increase taxes. Okay, so that's back what we're to. First is prepare the tentative budget. And again, I said this is kind of an administrative responsibility. This is where you review the services that you're currently providing and you make sure they're aligned with the organizational goals and how those goals may have changed maybe in a policy setting session that you've had within the last couple of months. I think it's a good idea to review your service delivery options. Some of you may contract things out, others may provide it in-house. Don't say just because we've always done it that way, that's the way to always do it. Review your service delivery options and see if they're still the options that make sense. For example, some of us in our local budgets and our local governments are providing services that maybe the private sector 10 years ago didn't provide. But now all of a sudden, maybe an industry's grown up where the private sector is providing it. Don't be afraid to say, hey, just because we've always self-provided, maybe there's an opportunity now for us to review the service delivery option and see if there's a better way for the taxpayer to have that service met. You'll cost next year's services, review fees. I mean, this is one of the things I will tell you when Raj tells you that the inflation is backed out of the property tax. You know, if you don't review your fees, you've just allowed the same thing to happen. You've allowed inflation to eat away at your fees. If you have fees that you are charging the same fee today that you were charging 3 years ago, I promise you, you are not recovering the cost of service because of what's happened with inflation over the last 3 years. I like communities to have a fee review schedule. You know, and for a lot of you, it's not feasible to review all of your general fund fees or any fees every year, but you should at least make sure that you're touching base on them every kind of 3 or 4 or 5 years. You need to prepare your revenue and expenditure estimates. And then you need to prioritize the budget. I mean, that's what the tentative budget process is about, is aligning all of that together. And then those revenue, and that's usually in a larger organization, it's all of your different programs doing it. And all of that gets submitted to a budget officer who then puts it all together, prioritizes it for the organization so that it can be presented to the council by the first Tuesday of May. That's state law. If you're a community that only has one meeting, it's by your May meeting. But most of you have more than one meeting, and so it's by the first Tuesday of May. Transparency matters when the budget's being put together. Again, we've talked a lot today about this is the public's money. The public is trusting you with the money. They're trusting you to make decisions on their behalf and spend their money so that they live in a community that they want to live in, that people want to live in, and that, you know, we have the things that we want in a community and that meet the community priorities. I think there are some tips for transparency. Public budget meetings, that isn't just a tip, it's actually a legal requirement. Todd has talked to you a lot about, you know, sidebar texting and emails where, Like, let's not do that. Let's have our budget deliberations be in the open, in public, allow the public to understand what you're talking about. Demystify the numbers. That's that narrative I talked about. If you just put a bunch of numbers out there, it's confusing. It's as confusing to the public as it was to you when you first looked at it, when you either decided to run for office or when you took office. I think those narrative descriptions of the budget, a lot of communities now are creating what they call a citizen budget, which is where they go in and they really simplify it. They simplify the charts. They really make it understandable. If you want some examples of those, we can pull some good examples from different communities throughout the state who are producing these citizen budgets. They're really quite good. Make sure that your numbers and narrative are posted on your website. Don't just post the numbers, post the narrative there as well, so that the public can see it. Quarterly updates, budget updates on the council agenda. Not only does this keep us thinking about the budget all year long, but if you do that and you have a quarterly update that includes a narrative description, it really aids transparency because it allows the public to kind of see how things are moving along with you during the budget year. Honest discussions and like, I love local government. Local government is where I spent most of my career. And the reason I love it is because we don't get caught up in rhetoric. I mean, there's nothing partisan about patching a pothole, and so let's continue to have those honest, open discussions. There's a reason why local government officials, you are the most trusted of any official. Molly, I think we've got the data again, right? When we go out and look, you are the trusted ones. People don't have a lot of faith in our federal and they don't have a lot of faith in our state sometimes, but they trust you. They know you. You're their neighbor. And so let's have those honest and open discussions, even if we have to tell them hard stuff. I mean, I've been with an organization that, had to go out and have 8 town meetings telling a very hard story about a budget. And people showed up very angry. But by the time we were done and we had talked about everything we were up against, they didn't love it, but they at least understood it. And I think they at least respected that we were willing to spend the time to come out and talk to them and listen to them and hear. I have some communities that have these really cool different budget workshops. I've traveled and I've seen like a budget discussion in a park. I thought that was the coolest thing I had ever seen. Like, who would ever think the budget official is going to go sit in the public park and talk to people? But they had boards up where they were allowing people to say, this is my priority. No, if I were you and this was the pot of money, this is where I'd spend the money. And they were able to fold all of that into their budget process. So just some ideas for you. And then focus on outcomes. Yep, Molly, is there a question?
Sorry, Kerri, I was just going to say we have a lot of folks saying they would be very interested in examples. And so maybe when we're done with the slides, we could also send out a couple of good examples for folks to see if you're open to that.
That's great.
Excellent.
Okay. Focus on outcomes. And we're going to talk a little bit more about that in a minute. So I'm not going to spend a lot of time there. I wanted to show you this. This is pulled from a community. At this point, I can't even remember whose it is. But when I saw it, I thought, wow, just the use of color on this chart makes it so much more readable. And later I'm going to talk to you about the columns that I like to see. And this one has almost all of them. For a periodic report, I always like to see the same period last year so that I can kind of see where we are in terms of revenue and expense for the same period last year. But otherwise, I really like this. And I thought that is the simplest change in the world to make, that all of a sudden made this so much easier to read in terms of other than just a black and white chart that was somewhere. And when we're putting everything on the web now, I mean, we can be creative and we can really try to demystify those numbers. Use charts. This is another community. This is their projected revenue sources. I thought it told a really great picture, a really great story rather than just a chart of numbers. Here's some other community examples. I think I've shown you these up earlier, so we'll go through them. I really like these. These are another community, just a different way for them to try to get the public to visualize their budget. So over on the left-hand side, you can see all of those big circles are their different spending, how their general fund breaks out. And then they have all of their departments over on the right-hand side with the budget, so that you can see like their economic development department as compared to sort of like their police department and things like that. So I just thought those were some good examples of different ways that people help visualize. And I am not like a creative visual person. Like it's not that's not an area of my strength. Anything that looks good is because Cassidy helps me. If it doesn't look good, Cassidy has not helped me yet. But I'm not that visual person, but I love it when I see examples of where people do things. Then I go steal them. I go take the idea because I think it's cool. Okay, then we jump into our legislative responsibility. When you get the budget as a council member and a council, you adopt the tentative budget, and then you set a public hearing date. The public hearing date has to be at least 7 days later from when you're setting that date. And then your tentative budget has to be available to the public for at least 10 days before you adopt it. So in reality, if you wanted to, you could set your hearing for 7 days later and have a hearing, but you couldn't adopt the budget at that point because you haven't had it available to the public for 10 days. Most communities do not adopt their budget until mid-June because you want to be able to do the next part is make adjustments. When you're making adjustments and you're having conversations and you're talking about policy priorities and you're having those deliberations, especially those of you in smaller communities, you're probably going to have to add additional meetings. And even our large communities often add additional meetings so that they have time to talk about the budget, have those deliberations, take some straw polls, see if they want legislative intent language. But all of this needs to be done before June 30th. You need to adopt your budget. So when you're having those deliberations, what are some of the questions you might ask? You know, I might look at the revenue estimates. I remember one time I was on the legislative side of a budget. I was staffing the legislative side, and I looked at the revenue estimates and I said, these seem higher than what they should be. Like, we've never had the revenue come in at that kind of growth. And we actually, in that setting, the council lowered those revenue estimates because they said that when we look back at a 5-year growth pattern, there's nothing that makes us believe the revenue is going to grow. There's nothing out there in the economy that's making us believe the revenue is going to grow at this larger trajectory than maybe kind of what the average historic growth has been. That might not always be the case. There might be something going on, but make sure you at least look at that. I think a lot of times when we look at our budgets, we get so focused on the expense side because the reverse can happen. And I actually see this more than I see an over projection of revenue. I see an under projection. This last budget cycle, I was working with a small community, and I said, why are you projecting your sales tax to go down? Like, you're having it be lower than what your actual sales tax was 2 years ago. Why are you doing that? Well, because we want to adopt a lower budget number. I said, but that's not realistic. Like, you have to have a realistic revenue projection in there. They chose not to change it. That was on them. That was okay. But make sure you understand those revenue estimates, because if you are under projecting revenue, you are leaving opportunities out of the budget that could be because you've under projected the revenue that might be available. We've talked about fees. I'm not going to talk about that. We've talked a little bit about one-time money, but when you're in that review period of the budget, I would really want to understand how one-time money is being used to balance the budget. We've talked a lot today about transfers from other funds to the general fund. Are those transfers reasonable and sustainable? Or in fact, maybe do we need to talk about property tax? I mean, that seems to be the question a lot when we're doing those. Are our expenditure projections aligned with historic trends, just like we talked about a minute ago on revenue? Are the appropriation units in the tentative budget aligned with the council's direction? And this is especially for our smaller communities. A lot of times, I mean, the appropriation levels that are in the budget have just been there for so many years, and we haven't like thought to change them or do anything different. And I think sometimes you just, especially if you've got new council members coming in, just take a look at, because it gets back to that, the question from, I think, a council member in Riverton, like, what is that appropriation level? Because that is where your legislative control is. And you don't want to be too micromanaging and too crazy, but you also don't want to have it at such a high level that there's so much flexibility that you feel uncomfortable with where the spending is happening. We've talked about service delivery options and different ones that you might consider. I just said this again, are we doing things or providing services in a way simply because we always have? And if that is the answer, and I'm telling you, this is in any setting, when that's the answer, it always causes my red flags to go up and I start asking more questions. Because just because we always have done it that way is not usually a very good reason to keep doing it. And maybe after the questions, we do keep doing it. But I at least usually want to satisfy myself that we've been innovative and we've explored other ideas. Is the capital improvement maintenance plan being implemented? Do I see implementation of the plan in the capital projects budget? And then finally, are our services aligned with our customer needs? And that's tricky. And it gets into this next issue. And when I talk to you about, outcomes and starting to focus on outcomes, maybe one of the questions to ask yourself is what you're buying versus what you're spending. Because when you look at this, presently, our funding, most of it is base. Most of it is what we historically get. And there might be a little tiny bit of new funding coming in. And our focus as we talk is all about the new. It's all about that little new piece. We don't really, and I'm not advocating zero-based budgeting every year because I think that's hard. It's cumbersome. I would rather have strong policy guide where we put the money. But I also would say, like, don't just let massive parts of the base budget never be addressed. And that gets back into we're just doing it because we've always done it. And so that's what I talk about when I say, kind of start to shift your focus a little bit. It's hard. You have to have harder conversations. You have to dig a little deeper. But in the end, it's more transparent. And I think you're going to be able to get your policy goals through easier if we're not just continuing to fund the same things that a council, maybe 2 or 3 or 4 councils ago, decided was aligned with community need. Community need changes over time. And we've got to make sure that we're staying aware of and responsive to those needs. And then we talked a lot about, monitor and amending. And we're going to get into some reports and different things in our next session on monitoring and amending the budget. But if you're a council member that sits over an administrative program, you want to be monitoring monthly. Any administrator should be monitoring their budget monthly, if not more than monthly, because a lot of our accounting and finance packages now allow us to almost do real-time monitoring. And then you want to adjust the budget as necessary within your appropriation levels. So you have ability within an appropriation level to move from major category to major category. What you cannot do is move from an appropriation level to an appropriation level. Legislative body, you're monitoring. A lot of you monitor monthly. I think that's okay. Quarterly is okay as well. Usually that's set kind of by a policy or an ordinance. And then you need to amend as necessary between appropriation levels. And I'm going to tell you, over my career, I have taken phone calls more times than I want to account from a council member, usually in a kind of smallish community, one of our smaller communities, that said, 3 months ago, so-and-so came to me and they said they wanted to make this budget move. And I agreed to it. We didn't vote on it at the time, but I did agree to it. And now we need to put it on the budget. We need to put it on the agenda. And I need to vote on the formal amendment. But now I know more and I don't want to vote for it. Do I have to? The answer is no. You don't have to. No one can make you vote for a budget amendment. But you wouldn't be in this position if when we decided we needed the amendment, we amended the budget. Don't do pinky swear, handshakes, fist bump. We're going to do this. if you feel like there needs to be a budget amendment, go through the process, invite the public into the public hearing if that's required, and amend the budget. So that we're not in that situation of somebody later saying, boy, I know more now, and I really don't want to vote for that budget amendment. So I think it's really important. A lot of our communities have a habit of kind of tracking all of those little amendments they're going to do and then doing one wipe up amendment at the end of the year. Really bad idea, especially if it ends up that things change and somebody might not want to vote for it. Then you're in big trouble because you've spent based on a vote that you thought was going to happen and it didn't. So do your amendments as necessary during the year. It's not a hard process and it keeps you budget focused throughout the year. And Molly, with that, that's where I'm going to end for today, unless we have any questions that are pending or any that pop up.
We don't have any new questions in the chat, but I will say for those online, we still have about 110 people with us. If you have questions, enter them now, and it's not a speak now or forever hold your peace. We're here, we're around, and we'll be doing this again. So if you have questions now, we have about 4 more minutes so we can answer them. If not, we will we can share our contact information. You're always welcome to follow up with us with questions you have, and then we'll be doing this again. Pat, when is part 2? That is a great question. We just decided yesterday that we're going to be doing a part 2. So once we know, we will share that out with you. And if we have that information like this, we'll be recording it. So if we scheduled it at a time that doesn't work for you, we apologize. It's tricky to find a good time for everyone. Kerri, folks are asking for your contact info in the chat. So if you're comfortable with that, we can share that.
Yep.
If not, we can just have them contact the league. And then there's recording. We have the email list of everyone who signed up for this meeting. So what we'll do is once we have that done, we will send that out to you with the recording link and the PowerPoint slides. One thing I really do want to flag for you all is that a lot of you, when you signed up for this series, used your personal email accounts or your campaign email accounts. Many of you have now transitioned to having your official municipal accounts. Cassidy Hansen from our office is going to send out a form to all of you, and you can just go ahead and update your email in there so that we start contacting you through your formal email account rather than through like my embarrassing, Hotmail account that I made when I was 13 or something like that. So if you want to make that switch, let us know. We contact you with a lot of official stuff, and so it's helpful to have that. So we'll be sending you your email, we'll be sending you the recording, we'll be sending you the slides, we'll be sending you some examples. So with that handled, Kerri, a few questions we have before I do my final housekeeping. We'll share Kerri's contact information with you. Kay Hoagland with Ogden Valley asks, can you speak to the role and structure of a finance committee for a city?
Yeah, and did you say that's from Ogden?
Ogden Valley.
Ogden Valley. Okay. Yeah, a council may create a finance committee to sort of dig deep on a lot of the budget issues. It's not required in law. It's if your community chooses to do that. That does not absolve other council members, though, of having to understand the budget. So the budget is a legislative action. It's legislative participation. If you choose to have a subset, it needs to be smaller than a quorum. And you've got to manage it that way so that you're doing with your open and public meetings. But I haven't really seen that other than in some large communities work as well. I think that in smaller communities, you've all got to kind of get dirty. You got to roll up your sleeves and get into the budget and understand it. But yes, you can have a finance committee if that's what the council chooses to do.
Perfect. If you have other questions, feel free to enter them in the chat. If not, I'll fill some time with a few housekeeping pieces of our upcoming events. So First, a huge thank you to Kerri, Roger, Cassidy, the league folks who helped put this together, and a huge thank you to all of you for joining us. I know that many of you, I can see you are at work or at City Hall and have things going on. And so really appreciate you taking the time out of your day to spend it with us and learn about this important stuff. We still have more upcoming events. So on Monday is our first LPC or Legislative Policy Committee of the next year. Each municipality is allowed to have 3 voting members on LPC, but LPC is still an open meeting. So if you are not one of your municipality's 3 designated voting members, you're still welcome to join. We'll be doing a bit of a legislative preview. Bills for the legislative session are getting numbered. Some of them are good, a lot of them are not. And so we'll be chatting through some of those. A little poorly timed in that instance is that on Tuesday, so the day after LPC, we'll be doing our follow-up elected officials essentials on the legislative session. So we're kind of flipping the order there. We're going to be talking about some of the policies we're seeing that we anticipate seeing in this session. And then the day after, we'll talk a little bit about how the session works, how you can get involved, anything like that. This Saturday, we also have our conflict competence training with Danya Ramore. And I know it is another Saturday training, and I apologize for the timing, but I do have to say that this training with Danya on conflict is one of, Kerri and Roger are also great, but this training with Danya is outstanding. I highly recommend it if you can attend it. Because we're going to be talking about conflict and different conflicts people have experienced or anything like that, we're not going to be recording it just to make sure that it's a place where we can kind of keep people's confidences. So we really encourage you to be there if you can. I guarantee it will be well worth your while. We can share the dates and times for all of these upcoming events for you in the email. I recognize that I started with a Monday, Tuesday, went back to Saturday. So I apologize on that. That's not great flow on my end. And then next Friday, we'll be doing our final, well, not final, because we're going to be doing another budget training, but we'll be doing the EOE training for those small governments that participate in our LAA program. And so if you're wondering if that's you, if you're fewer than 10,000 residents and don't have any full-time staff in your city, that's a pretty good indicator that that's you, and we'll follow up with you accordingly. So with that said, Saturdays will begin at 9, Mondays LPC will begin at noon to 1:30, Tuesdays webinar will be at noon, and then Friday's webinar will also be at noon. So we'll follow up with all of that information. And with that, thank you so much for your time and have a great day.